Hello guys, and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's episode, as always, we are going to be analyzing the gold and the crude oil price chart. Now, we've had an extreme amount of volatility in the past 24 hours, a significant move here in the gold markets, and we're going to go into this and explain what's happened exactly. But before I start today's video, I just want to say a huge congratulations to everyone who is part of our streaming service and Telegram signal chat. We closed out a profitable trade where we sold gold a few days ago up at 1865 with our take profit down at 1830. I think it was yesterday's episode when we were still trading up around 1845 where I was saying that we're likely to go and target this 1830 area, and that's exactly what has happened. And I did say that there would be two scenarios that would likely play out here. We'd either go back test the top of this downtrend that we've been trading in for some time, and then bounce off it, and that'll give us enough momentum to go and retarget that 1877 area, which is our swing highs as I've marked on this chart. And we could even potentially break through that 0.5% fib level and go and trade up towards 1920. Or the second scenario is that this whole breakout here was just a false breakout. It was a fakie, and we've gone and tested that 0.5% fib level, and we've just we've just come down and broken back into this downtrend, which is not good news for the gold bulls here, and that's exactly what has happened. But we gained a lovely 1.92% here on that gold move towards the downside. So again, congratulations to everyone who is part of the signal team. And if you're wondering, how can I be part of your signal team, I'm going to leave a small clip at the end of this video which will explain how. Gold, it's fallen all the way down to the 1805 level where we've come and made contact with that 50-day EMA. And you might be asking yourself, why did gold do this yesterday? And that's because Joe Biden has now appointed Jerome Powell as the Fed chairman for the next leg. I did mention this in yesterday's episode that it will likely spark some volatility, and that's exactly what has happened. Now, Jerome Powell has been known to be very dovish. He's cut interest rates to a record low. He's also injected $120 billion worth of capital into the financial market. So incredibly dovish. However, that being said, once this news was announced, Jerome Powell is known for being a man of his word. And at this moment in time, he has announced that as of next month, there'll be a tapering process that will commence. Starting with $15 billion from that $120 billion that's currently being injected into the financial markets. And as well as that, the yields reacted in a way which indicated that there's now a 50% chance that interest rates may start to get hiked in May next year. Now, gold typically thrives in an environment where interest rates are near an all-time low, and if the Fed has also decided to inject $120 billion worth of capital into the financial markets, well, then that means printing money. And of course, gold does very well when money is being printed. And that explains why we saw this huge rally towards the upside. If we go back, I think it was this drop here where we rallied all the way up to that 2070 level, where gold rallied 42% in a very short period of time. That was during COVID, when interest rates were slashed to a record low and all that money was being printed. So gold performed very, very well. But now that there's talks of interest rates starting to be hiked and the tapering process is set to begin, gold has obviously come under some pressure. So the fact that we are now back in this downtrend is very bearish for gold. I did mention in yesterday's video as well that we have just gone and formed a bullish crossover, and that's where the 50-day EMA is now pierced above the 200. This basically projects a medium to long-term bull trend. But that being said, it could just be a quick pop up, and then if the gold prices continue to fall here, which they easily could, because if we look down at the RSI, we're nowhere near considered to be oversold yet. We're actually at the midway point, so gold could easily fall and continue its downtrend, perhaps down towards the next fib level, down at 1770, and that could cause the 50-day EMA to then pierce back below the 200-day EMA, causing a bearish crossover. Of course, we don't know whether that will happen. Time will tell. But this move back into this downtrend that we've seen here for gold really is not good. On the flip side, though, let me cover both sides. That's just me speaking from a bearish perspective. If we were to break below the 50-hour and the 200-day EMA, and we got that bearish crossover, then that would that could trigger a move down towards 1770 and then eventually maybe 1722. That's an area where we have found support and bounce in the past, and if we broke below there, then I think we go down towards 1700 or 1680. But it's only fair that I cover the bull side as well. It could be that we find a fantastic supportive area around this 50 and 200 day EMA, and then this bullish crossover stays intact, and we may break back above this 0.38% fib level, and we could then go and retest at the swing highs. I think that, you know, if gold could clear this 1877 area, which are the swing highs here, that is where gold really does take off and trades up towards 2000. That would be incredibly bullish. But at this moment in time, we're trading amongst that 50 and 200 day EMA. I have in fact just opened a new trade open over in our private Telegram Signal group chat, and I've explained why I have taken that trade over on the streaming service. So again, I'm going to leave some information at the end of this video explaining how you can join and be part of our group and follow me on that trade. But nothing that I've told you today is financial advice. I'm just explaining both sides of how gold could potentially react here. But let's move over to the crude oil markets. Crude oil under pressure in today's trading session, currently down 0.84%. We did get a daily close above that, what was it, the 0.61% fib level, which is very bullish. But during today's trading session, we have actually come under some pressure, and we're now trading at $75.82 a barrel. This could potentially trigger a move down towards $74. But on the flip side, if we could turn this around, as we did get a daily close above that 0.61% fib level, it could send us all the way to the 50-day EMA, up at $78.37. So we're kind of in this midway point between you know, the 50-day EMA, sorry, and the 0.5% fib level. So it's very 50-50 here for the crude oil markets at this moment in time. In fact, it's very difficult to predict which way it could go. You know, if we were to fall towards the downside, you've got a 3% move. If we were to go towards the upside, you've also got a 3% move. So I am not interested at this moment in time into trading crude oil. I know that many investors will try and trade it. My advice would be not to, because, you know, it is very 50-50. It could go either way. You know, what 1 minute you're hearing you know, all these bullish price forecasts that crude oil could go to $100 before Christmas, and the next minute you're now hearing rumors that, you know, the US and Japan are both thinking about tapping into their oil reserves to try and help the surging energy prices. So personally, my advice would be not to touch this, but of course that's not financial advice. It's up to you to do your own research, but I will not be trading in this personally, because, you know, if we were to break below 0.5% fib level, we could even go down towards a 200-day EMA at $70. My way of looking at this is that I'm more medium to longer term trader. And if we did get moved down towards that 200-day EMA, well, then that would be a fantastic opportunity to place some bids and trade it more medium to long term, and look forward, you know, where do I believe crude oil could be trading in a month or 2 months time, and that would be around this area up here. So that would offer fantastic value. But right now, at this moment in time, if I was to buy here, you know, it's very possible we could go lower before we do go higher. So not interested at all with the crude oil markets. I'll be sitting on the sidelines. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have 2 subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.